And joining me on the podcast and on video is Vadim Alexandre, Head of Healthcare at SP Angel. You're Vadim.
Yeah, good. How are you, Justin?
Well, do you know what? I may be a bit more stumbly than I normally am. Literally, the start of this week, I thought I was dying. Honestly, I got some kind of bug. I don't know what it was. I started feeling ill on like Friday, and I thought, oh, maybe it's just a funny stomach thing, you know. And Saturday, I went to bed early, and I didn't get out of bed Sunday. I didn't get out Monday. Well, just to get water, go to the toilet. I went to the toilets many, many times, but I was literally walking to the toilet like Joe Biden. And I getting back in bed. I thought I was going to die. And me and my wife sort of fell out and said, "You haven't even come down to see me." I said, "I've sent my son Monty down, our son down. But my son's like 11. You come down. How you feeling, Dad?" I said, "I think I'm dying." "Okay." And you go back upstairs. And and that was it. I thought I was dying. I thought, there's no way. And I literally, I don't know where it came from, that bug. It's I mean, unbelievably, it just comes at that, takes you down for 2 days. I literally couldn't drink even. I was so dehydrated. And then now I'm back. It's almost like I was like Joe Biden for 2 days. And then I'm now like Kamala Harris. So I did a transformation,
there's COVID circulating. There's the summer virus, and it does have gastro symptoms. And then there's obviously the noroviruses. They're all very different. They're difficult to distinguish nowadays. So
well, the lady said, I even spoke to the doctor and said, "Yeah, well, the thing is, how long have you been at this?" I said, "Well, no, 48 hours, more than that." I could hardly speak. She said, "Well, if it's like it for 7 days," I said, "7 days? I'll be dead in 7 days. I'm not drinking." She said, "No, it'll dissipate." Honestly, she said, you'll still feel a bit dodgy in 7 days, but you'll feel okay. You'll be back to eating and stuff. And so she was right. But she said, I said, "How did I catch this? No one else has got this in the house." I said, and she said, "Well, you've probably been out and about mingling." I said, "Do you know me? I don't go out and about mingling." I said, "I have been at Asda and Tesco's, and maybe, do you know what I realized it is? I think I like to do everything so automated, and those touch screens. So even when you go to Asda and you do your own scanning, touching the screens, you realize how many people are touching those screens. And you may go back, you may pick some up at the supermarket and on the way home just eat it. And that may be it. And you think, I'm going back to COVID and wear a mask and gloves and spray everything. Because I think you start to realize then, you think there are so many germs out there that you don't actually realize. And you realize that's like the world of medicine, isn't it? Your area sort of thing, where companies are trying to come up with these, these cures for all these kind of bugs and all that stuff. But it is phenomenal how it's a small bug that no one else in the house had, took me down, took me out for 2 days. And you realize there's so many bugs out there you're not aware of,
Well, this takes us nicely into one of the companies you and I wanted to discuss today, which is, this Novacyt, which tests on, all kinds of things. But they were, we all know the history. Well, many of us know the history in terms of they did really well during COVID. And like so many COVID stocks, they had a COVID overhang, which we can get into in a second. But most importantly, their shares have been rallying recently. And I think it's mostly around monkeypox, this whole monkeypox. So back to your point about bugs being around and there being serious bugs all over the place. Well, the World Health Organization, I think, recently upgraded this monkeypox outbreak to a more serious category. I don't think it's going to be a COVID, like a similar thing to COVID. I genuinely don't think, and nor does the WHO. But it certainly has affected Novacyt's share price. I mean, if you look at the share price over the last month, it's true.
Well, do you know what? Let's go back a minute. So if people don't know about Novacyt, this was the poster child for COVID stocks. Correct. This is what every other COVID stock wanted to be. It actually started earning lots of money from COVID. And if you can see here, if you'd been lucky to get into this, literally January 27th, 2020, and you held on to literally 26th of October 2020, that's a 10,000% return. That's phenomenal, absolutely phenomenal. And since then, of course, there's a lot of cash, but you're thinking, hang on, the tests are going to go down. And so, and that's what's happened is literally, it did a double top and then came all the way back down from what? 12 quid a share. And literally it came down to a low here of 36 pence. But it still had lots of cash, didn't it? But then it had this arguments, this ongoing litigation thing, this legal tangle with the HMRC or the government
With the
Department of
DHSC,
Health.
the DHSC.
Sorry,
Exactly.
so Department of Health for not delivering on certain things or not contractually. But what's happened to that? So that's okay now. It's gone
So
by the by,
yeah. So that's it. You've covered most of the history. I mean, it did the actual pricing was it went from a low of 5p in 2019 all the way up to £14, I think, was the peak. And you're right, now all the way back down to 40p. And then very recently, because of monkeypox, Mpox, it's had a spike. Now, just to cover off the DHSC bit, like you said, the overhang or the hangover from COVID was that they were in a dispute, like so many other companies. We know many others were, Cambridge Nutritional Sciences, which was previously called Omega Diagnostics, had a dispute with the DHSC. Abingdon Health had a dispute. There was a whole like post-COVID mess left, a hangover from that, in that the DHSC was trying to claw back as much money as they could because they overspent during COVID. Basically, that's what's happened.
And so what were they saying? They said that we didn't order these tests. Is that what they're saying, basically? Or we didn't
it was different in every single case.
Yeah.
All of these companies had different issues with the DHSC, and some of them haven't been resolved. In this case, they have come to an agreement. In the case, in their case, it doesn't actually matter because what's important now is that the dispute has been settled. Okay, but what they were saying is they were claiming that some of their tests or something were not up to not as promised. The quality of the tests were not as promised, and therefore they wanted their money back. But to give you an idea of the size of the claims, the claim that the DHSC had on Novacyt was 130 million euros. Okay, obviously Novacyt a counterclaim of 80 something million euros. Long story short, they settled only recently, about a month and a half ago, for 5 million. Okay, pounds. So, that's great. You've taken this major issue off the table for Novacyt. That's now gone away. It's history. There's no turning back on that. It's over. They've agreed terms. So Novacyt owes them 5 million pounds. The surprise is what's announced today, actually, is
I saw that.
the as a result of them not having to deliver these products, etc., they have a 12 million claim on VAT not paid. You see what I'm saying? So those products weren't sold, so therefore they get the VAT back. So now they've just received 12 million pounds back because of all this being resolved. So net, the government's out of pocket, 7 million quid, because they got 5, but then they had to pay back 12. Yes,
so literally, it's Novacyt 1, government 0.
Their net. Novacyt has gained 7 million pounds from the resolution of this whole thing. Okay. Calls into question why this, the DHSC, went all this far. But who cares? It doesn't matter. It's all over now. That's the key. The key is it's all over, and Novacyt's actually come out a winner out of this because there's 7 million pounds of cash more on their balance sheet, not 5 million pounds less, let alone 130 million, right? So now it's all over, and they have 7 million pounds net from the exercise in their pocket, and that was just announced today. So that's another positive for Novacyt. So things are rebuilding. The monkeypox thing may be a little bit, aggressive, the share price response, because I don't
because the thing is, I was thinking about this. When you are an investor and you go through a period of COVID, you are aware that pandemics may happen. I mean, it's every 100 years, but you often have these viruses sweep through, and they do shake the markets a bit. But then I was listening to some people, experts, and first of all, I did look up, why is it called Mpox now, not monkeypox? People saying it may be racist. Why is that racist? It's like ridiculous. They named it Mpox. Why is that? What, the monkeys complaining or what? I don't understand. But it doesn't come from monkeys anyway. It's probably come from some other animal. But anyway, so it's very inaccurate anyway. But they were saying that, there won't be a problem here because unlike COVID, we didn't have a vaccine at all. Whereas Mpox, the first strain, has a vaccine. They say that probably will be effective on this other strain anyway. And if not, you just tinker that and, tweak that in some way or work on that one. So it's nowhere near like COVID. There is a vaccine already out there.
It's also not. I think the most important element of this is it's not an airborne disease. Like it's contact based. So it's like varicella. It has blisters that are contagious, but you really have to be in contact with it mostly. You know, someone can sneeze on you, it's true, but it's not COVID. It worked its magic, to put it lightly, in that it was very, very airborne. So someone at the front of a bus would be contagious, and someone at the back of the bus could catch it. Do you see what I mean?
Yeah.
So that's really, you know, that was its.
What was that film called once where there was was it called Contagion or something like that, or I can't remember what it was, and they realized that was one of the big lines in the film where they're in this hospital in Africa, and they turned around and the guy looked at the vent, he went, "It's airborne." And he realized the virus is airborne. But you realize how dangerous that is. It's not, you know, you have to have physical contact with someone with monkeypox. You do with COVID, you didn't. It was airborne. So in enclosed spaces, it passed very quickly amongst people and were taken down. And so I'm assuming there are people who are bought into Novacyt up here, still holding, but they are now ramping the fear out of mpox, saying it's very dangerous. It's going to go back up to where it was, its previous highs. But there's no danger of that, like you say. Two reasons, like you say, it's not airborne, and there's been a vaccine that could. This lady was suggesting, I don't know what she was an expert. This is, so it should be effective for most people. But if not,
it's not going to turn into a COVID type pandemic. I'm quite confident of that. But the one thing that is good about Novacyt is they are still at the forefront of being first responders to all of these tests, you know. So the company did really well during COVID, and I don't think that's been forgotten, you know. So it may not be monkeypox or mpox, it might be H5 and N1, the new flu pandemic, you know, that's going on around, you know, the avian flu one, you know, and who knows, whenever the day comes. I don't think we have to wait 100 years before we have another pandemic, because I think they're fast coming, and you know, testing will feature.
Well, there's viruses.
The company does a lot more than just that. But my point being is, yes, there's maybe a slight share price overreaction to this one test, but there's a reason people think of Novacyt when they think of testing for pandemics. You know, they were the first responder.
Yes, exactly. They're almost the go-to company. And you realize, you know, how far are we on now from, you know, COVID? A few years, three years maybe, you know, and yet, you know, you're going to have these viruses pop up every now and again. And it's not, you don't have to wait, you know, if you look back in the history of the stock market and look at viruses, they come out every 5 years pretty much. You know, you get one worry, the market's a little bit, and then you think, oh, it's okay. So, but on a revenue and earnings basis, this is very good for Novacyt, because like I say, they are the go-to pretty much for this company. So it's not like they have to wait 100 years for another. They're quite regular, you know, and the tail on them is quite long, you know.
Yeah, but I think it's good that it also highlights, you know, the company that, you know, people kind of forgot about the company a little bit because this whole DHSC overhang, right? Now that's gone. That only happened this summer. Now, just today, they've come out winners because they have the cash, like we just described. That's, you know, the VAT rebate is substantial. So their balance sheet has been strengthened actually in the end by this whole exercise. And so it's not, you know, the company is moving in the right direction very quickly. That's the conclusion, I would say, of the last few announcements. You know, they still have a lot to prove, of course, but I think they're, you know, under the stewardship of a new CEO, I think they're really on track. You know, there's a lot of momentum in their story, and I hope to see, you know, that business. So just to give a bit of background, they made an acquisition of Yourgene. You remember Yourgene?
Yes.
Which was also another AIM company. So Novacyt bought Yourgene, and now the combined entity, you know, we're yet to see kind of the real pro forma business, and that's in the pipeline and it's coming. There's been, I'm sure, some very what do you call it? As with all acquisitions, you would expect some cost controls to kick in and some synergies to be benefited from. So all that is coming, in my opinion, and soon enough you'll see the pro forma revenues really start growing, and that I think is kind of definitely underappreciated by the market until this mpox spike. So parking the mpox spike, you know, for a second. They were undervalued, you know what I mean? So, and they probably still are.
Well, there was that worry as well.
Cash is increasing, you know, based on this DHSC fix, if you like. And now it's just all about demonstrating growth in the business and cost controls.
Yeah, and they did come out with a trading update. This is before this 12.2 million. They did mention that at the bottom actually, following the settlement. They said we expect the company believes it's entitled to have all of that refunded. However, there's no guarantee. They do mention that. So
And
they
now
have
it
got it
is
refunded.
guaranteed
Yeah,
because
yeah.
they've received the cash.
Yeah, they
Exactly.
just say group revenue for H1 expected to be 10.3 million
Yeah.
from H1 2020, which was 3.3, of which 7.8 relates to the Yourgene acquisition, that company. But they say excluding COVID sales, 11 point pro forma revenue, excluding COVID, 11.4. So there's a lot of growth there in stuff. But they don't mention, they do, cash position is good, 32. They don't mention, kind of trading updates. I often say this. I
No,
like,
that's it. That's what I'm
yeah,
talking about. I'm talking about the future. This is kind of really
yeah,
genuinely a pro forma,
yeah, yeah.
adding one and the other. Really what you want is the integrated business going
Yeah,
forward.
yeah, yeah, yeah,
I
yeah,
would expect something, from the results going forward now. I think they're going to give
yeah,
more and more visibility. I'm expecting that in the future. You're rightly so. The trading statement already has alluded to that, and it's moving in that direction. But I would expect, um, growth projections and things like that to come.
yeah, exactly.
Yeah.
I don't see exactly the cash burn here and what they're doing. They don't mention anything about that. They do mention the things. They're going to be selling their place in Taiwan as well, laboratory business. I don't know so that's there we are, a bit of cash maybe coming. I don't know, but there we go. Okay, it's Novacyt. So it's life in the. It's not an old dog. You realise that there's a valid business here because there's always stuff to be tested on a regular basis. It's like
Correct.
not once in
Correct.
100
And
years.
their portfolio is bigger than it's ever been as a combined entity now. The
Yeah,
combining
yeah,
entity with
exactly.
Novacyt, they
Yeah,
have a bigger pool and growing. So there you
yeah.
go.
Okay. What's the market cap there on that then? It's 66 is there, isn't it? Okay, okay, cool.
Much
Next
of
one.
which is cash. Much of which is cash,
Yeah,
right?
yeah. Well,
You
it
know?
was it was 32 at the last trading update. Now 12.2 added to that.
Yeah.
Take a little of cash burn off, but it was 40 odd million of cash.
Yeah.
Yeah,
Yeah.
good. Um,
Exactly.
mm,
There's some burn involved, so we'll have to see what the last position,
yeah,
post
yeah,
interims is
yeah,
going to be. But nonetheless, you're ballpark. Yeah. The
yeah,
point
yeah,
being,
yeah.
a lot of the market cap is cash currently.
Now, if you look at this chart here, I gotta say, I took it when we last discussed this. I did take a bit of these companies. I thought, yeah, I quite like this because this is companies and share price has done, previously it's done really well. I mean, we were back in the 2020s up to 2021, maybe a bit of COVID there, but literally it did go from, 10 backed to £2.
Mhm.
And they've had, they've repositioned, they've acquired companies and Cambridge Cognition come out with the interim results and they are in transition. They've been acquiring now, right sizing
Yeah.
and all that stuff. But if you look at that chart, it looks dreadful. Then you zoom in, okay, and you scroll down and you can see here, I've got put some a red line there for resistance. It's trying to break above that a few times. It hasn't one day. It hasn't closed above 45 pence since May 2024 this year, and it's dipped down to a low of 38. Then it's broke back up here. So obviously it's almost some support there. And so it was trading in this line. It's range between 42 45 pence. They came out with interim results today, and it's one of those companies that they are improving because now they're not going backwards, seem to be going forwards because
Yeah.
they've had these acquisitions, haven't they? They cost some money and they've been losing money. But the costs they're saving, they come down massively. And let's get it out. Anyway, explain what they do if you could, Vadim, before we get into Cambridge Cognition.
Yeah, so this is a company I have followed for years now. I've
Yeah,
been a holder for a long time. I like this business. It's more about the picks and shovels than the actual biotech. Do you see what I mean? So they're a
yeah.
service provider to pharma companies in the CNS space, the central nervous system space, specifically in assessing cognition. Okay, so where does that feature? It features mostly in Alzheimer's disease, Huntington's. The AD, Alzheimer's disease, is the big area. Okay. And as we know, there's a few drugs now that have been approved in that space, and there are many, many more to come. There's a lot of work being done. That is the next frontier, if you like,
Yeah.
in one of the next frontiers in medicine. So they're helping pharma companies assess cognition. They do it through various services. Mostly it's digital cognition tests, if you like. Okay.
Hmm.
One of them, an interesting one, one of their more recent products that they're launching is a voice recognition test. So it can tell from your voice whether you have early signs of cognition
Yeah.
problems. So early signs of Alzheimer's disease, for example. Okay, so that's what they do. They sell their services to pharma companies that are developing their drugs. The problem they've had more recently is that the pharma companies have themselves, a lot of them, the larger pharma companies have been restructuring their R&D and spending less. And a lot of the small and mid-cap pharma or biotech companies that were their clients have, because the biotech market's been so bad, have not been able to finance their trials. So have either paused, reduced spending on their trials or gone out of business as companies, right? So, the market's been tough for the last 3 years for everyone, including for their clients. So they've seen revenues go from, in 2021, growing at a clip of 20 to 30% per annum to a standstill, and even contracting a little bit, okay? What we do see in these results is that I think the contraction, say barring a few more surprises, I don't think there will be any. It's more, I think now this business is stabilized, exactly as you've said. So we're probably seeing annual year-on-year growth of 0, okay, which is disappointing given the previous year's growth rates in those early COVID years. But what I do believe is that they've stabilized the business and now they're in a position to start growing again. And if they get a tailwind from the market, well, then they could probably return to the similar growth rates of the past, because the market itself for these, for these types of assessments is big and growing very quickly. And I don't see that going away. I think this is a big therapeutic area. No one's going to stop doing research on this space. The problem is, can the market find financing for all these companies to do that research? It'll eventually return, okay? In the meantime, you're absolutely correct. The company has absolutely slaughtered their cost base, which is, okay, maybe that's not the right word, but the point being is I've never seen a company adjust so aggressively. They've cut $3.5 million out of their cost base, and they're basically washing their face now.
Yeah, look at that. To me, this is why I like this company, and I like what they're doing. I like the growing market they're in. But let's be honest, there's still risks ahead. They need to win contracts, need to grow the top line.
Yeah.
But if all of it, one contract, and they will be making a profit pretty much, because it's almost like they've gone from literally adjusted operating loss from 1.9 to 100 grand.
Yeah.
And they've got 3.4 million of cash. So let's say you double that for the year, because that's for 6 months, that's 200,000. Let's say add another 100,000. Let's add another 150,000 on top of it, and they make 350,000 loss. They've still got almost 10 years of runway.
Yeah, they're not
that cash burn.
Exactly. There's no concern whatsoever about the cash position anymore.
Yeah,
100%. There's not going to be a distressed placing. They've done it effectively.
Yeah,
it wasn't that distressed. It wasn't at a steep discount. They did it at 40p. Share price, as you showed 2 seconds ago, is 46p. I think this thing is turned around. Now it's a question of how quickly can we return to the good times, where growth is reinstated. So they've talked a lot about in this set of results about their new biz dev team, their business development team. That's where they've invested. So in spite of cutting costs, they've put their money where, in the most important part of their business, which is growing the sales. And let's hope that team delivers. The team is up against a tough market still, but historically this company has been able to, over and above its standard run rate, which is the one I would say representing the 13.5 million revenues that they're doing, because they're expecting it to be back-end weighted like last year. So it's about 5.5 first half and then 7 or 8 or whatever it is in the second half, okay? So that the run rate is about 13 to 14 million sterling per annum. But where we might see surprises, and again, it's, I've been hoping for this for some time. It's just the market's so tough. But when it returns, what we'll probably see is larger contracts stacked on top of that. So, million to 2 million to maybe even larger contracts, stacked on top of the steady run rate of much smaller contracts, which they don't announce individually. Do you know what I mean? Whenever they have an oversized contract, they announce it separately as a big win. So what I'd like to see from this company in the next, say, 2 to 3 years is, as the markets return, and maybe even ahead of that, they start to land bigger contracts again. So you can expect your standard 14 million, maybe growing at 10% out of them. And then with surprise big winners on big contracts on top of that.
Yeah. And I say, apart from the size of the company, like I said, they are not far of one-time sales, pretty much.
Yeah. Yeah.
And they got cash there. Well, in fact, they are one eight times EV sales. But they got cash there. And like I said, they now have a bigger pipeline. It's more differentiated than they did before, so they can address a bigger market. And like you said, they are focusing on profit and sales, which I like a lot.
Yeah.
And they've got a plenty of cash runway. The cost base has been slashed. And
Yeah.
so you think, okay, this because there's risk here. Of course there
Yeah.
is. Any investment carries risk, but it's quite low compared to the potential reward. I think broker's got a 125, 125 pence target on it. It's 46 pence right now. But what's that? Three times sales, I suppose. Yeah.
Well, that's it. In a good market, I can see this going all the way back to 4 times sales, which is what they've done historically. They've seen
Yeah.
highs like that.
But
But now they're a
start,
stronger business from
yeah,
then. They were
yeah,
worth 4 times sales when they were a weaker business. Now they've also integrated two other businesses, fully integrated them.
yeah.
And one of the product lines I think might surprise in the coming years. That's the voice one.
I heard of someone talking about that on Bloomberg. I literally, I had friends arriving, and I thought, is that they talking about, what are they talking about? Cambridge Cognition, and it was like, and you can. I thought that's Cambridge Cognition they talking about. I'm sure it's the day this was, and just on Bloomberg Radio, and I thought, because obviously they were talking about it, it's very cutting edge, and the fact that even if it's not Cambridge Cognition, it says something like that. They are cutting edge. This is quite cutting edge
Yeah,
here,
yeah,
So
definitely.
they are in that
And
space, and
and
so it's yeah.
this company in particular, they're pharma grade cutting edge, which is very different to voice recognition. I don't know, to try to figure out what a person's trying to
Yeah.
say. This isn't like Chat GPT finishing your sentence. This is trying to figure out whether someone has dementia based on the way they're
Yeah.
speaking. Pharma companies aren't taking on services that are pointless and meaningless. They have to go through a proper validation process, an empirical validation process, which is what they have. That's the product they have. I think it's probably one of the most cutting edge products in the market in this space.
Yeah.
So
Okay.
yeah, no, I think it's in that product I'm very interested in. I can't wait to see. It takes time for adoption to kick in on new products, but once it does, I think it could be very promising for them.
Yeah. It reminds me almost like this company right now. It's like a Formula One car has been whizzing around like hell. It's almost conked out, overheated, and come down, pulled in. They've done the entire refit, all a bit of a time. Entire refit, but it's like ready to go now. It's ready to go. It's all set. It's healthy. It's got the cash balance. Good market. It's got a new team, commercial adopted team with lots of experience there in those fields. Excellent products. It's
Completely
just ready
agree.
to
I
go. And I
think
think
this
what
one
they
is
if they
it's
announce
ready
one
to
big
go,
contract,
definitely.
yeah. If they announce one big contract, I think this is going to motor and already though, it's a good start on the chart. I mean, we've hit a low here. It went back above into that range where it was in for a little bit, and then it traded in that range for a while. Now it's broken that previous high, so it's a start. I would say that's the downtrend has ended, and almost now we're at the start maybe of an uptrend. I mean, we're not quite there, but I mean, it's good. It's good that this has come out. This has happened on their results because it shows they're probably it's been oversold, they're undervalued on where they are, and this is getting back to mean a little bit before they start improving,
Yeah, I
which is
completely agree.
yeah.
Completely agree.
Anyway, listen, we're biased because I hold stock. Do you hold stock?
Yeah.
Vadim?
My history of this stock is I top slice a bit when they were nosebleed levels. If I were a trader, I should have sold all my stock then and bought back, but hindsight is 2020. But I did manage to sell some of my stake, I think above 100p. I was lucky. I think I sold a third of my stake and I kept 2/3. But to me, it's a quality business. It always has been.
Yeah.
I've always liked the area. I've always liked the management team, and I've always liked the business itself. And it's just proving that in terms of its ability to right size its cost base, to like you said, to focus on what's important. We have to, in their minds, they're like, we have to get this business profitable,
Yeah.
and they're doing that. So
Yeah. Look at the rises that happens when it crosses that 200-day moving average, in the last few years. Literally went from 55 pence to 170, and went back down to like 22 pence, across 200-day moving average, up to £2. And I think now they've sort of got it right that they're going for sustainable, rise, which is quite good. The cost base is lean, and we're not far off that 200-day moving average. That's around about 48 pence, and we are at 46 pence.
Yeah.
So it's not far off that. So do your own research, ladies and gentlemen. We hold stocks. We may be a bit biased. Isn't everyone when they're investing in a company? You very rarely hear. In fact, I have heard some people now and again say, when you get hammering on stock, really hammer their own stocks because it's giving them a battering. I say I hate this company, but so everyone's mostly biased to stocks. So do your own research. But like I said, you very rarely hear people who are down on their own stocks. Otherwise, why hold them? To me, I just cut. If I really hate the company and I think they're not improving, I just cut. It's not when holding a stock and just slagging it off. You might as well just get out. I hope people do that. It's quite funny though. Vadim, thank you very much for that, and have a nice weekend. We'll speak.
Excellent. Thanks, Justin. You too.